Lindsay? So, thank you. Yes, I'm slight change of gear today. This is integrated operations. It's something that's really come out of the oil and gas industry and moving across into energy and mining. And I want to share a couple of projects we've been working on in the last year with BP and Woodside. Give you a sense of what integrated energy and integrated operations is all about. So the two studies we're looking at is the BP LNG offshore plant in West Irian in Indonesia and Woodside in the Northwest Shelf. So two LNG projects. We're a Perth-based company, just thanks to my colleagues in Perth. We're also allied with companies in Stavanger and London and Houston. And there's some references there to some papers we've done recently and a presentation we gave last month at Appia. So what is integrated operations? Well, two definitions there you can have a read of. But it's essentially the integration of people, work process and technology to make smarter decisions and better execution. So real-time data is a big aspect. Collaborative techniques is a big part of it. And multiple expertise across disciplines, organisation and locations. The second one I like a bit more, it's increased cooperation, independent of location, between operators, maintenance personnel and electricians, etc. So the last line there is important, which have been facilitated by new information and communication technologies. So this is something that's been going probably for about 10 years. It's come out of Norway and Gulf of Mexico, with operations becoming more remote and more difficult to have people out there offshore or onshore, and wanting to have a central base where operations can be monitored and controlled. Analogues for this, Rio Tinto is part of their Mine of the Future program. I'll talk about that in a moment. Intelligent energy is a term that Saudi Aramco use in the Middle East. Digital energy is Petrobras's term in Brazil. IO, integrated operations, is what Statoil use. Smart fields is a Shell term. Field of the future is what BP use. We've been working with Woodside, who've called it intelligent operation, or IOPS. Chevron use iField, and Siri use digital oil field of the future. So they're all in-house programs, but basically looking at the same thing. How do we look 10, 20, 30 years down the track and think of a new way of working for these complicated assets? In terms of integrated operations adoption, as I said, it's probably been going about 10 or 12 years. First of all in North Sea, then Gulf of Mexico, less so here in Australia, probably fairly recent. In the oil and gas industry, it's considered a must-have in order to remain competitive, and it's a model way of working for the companies I mentioned before, Shell, Statoil, BP, etc. Rio Tinto established a Perth Remote Operations Centre in 2009, so it's been running for about 2 years now. Probably the first company to really put something substantial in Australia. It's a 24/7 operation. It runs every day of the year. About 400 people out at Perth Airport, and it runs 11 mines up in the Pilbara, 2 ports, and about 3,000 kilometres of privately owned railway. So it's a fairly substantial operation. The mines are monitored and controlled from there, and there's more and more coming back to that centre in terms of operation and decision making. In terms of economic benefit, Shell announced $5 billion value from their smart field program. That's over the last about eight years they've been running that. BP have listed about 100 million barrels of oil over the 7 years they've been running Field of the Future. Saudi Aramco have got into this in a big way. They have the largest onshore and offshore oil fields in the world, and they have 19 fully iField enabled fields. Quite something that they've invested in. So the design implementations are growing in scale. And a lot of it's about operators wanting real-time data, their own data store and applications. And it's an enabler for remote, large-scale oil and gas developments in Australia. Woodside is one example I want to talk to you about. So the key 5 things we look at in integrated operations start with the people. I think there's a whole aspect to this, which is a culture change. Behavioural and cultural cooperation is the key to success, and people change and change management is a long cycle that takes a lot of effort and a lot of time. The work process is underlying the way you do things, incorporates all your learning and your continuous improvement, and that's something that has to be realigned, and I'll show you in a moment how we do that. Physical environment is the enabler, how people work at their physical offices, both at the site and perhaps in the centre, offshore platforms, offshore drill rigs, etc. Organisation, the way people are structured, that often changes as well. And the technology is the enabler. It must be reliable, easy to use and well supported. So you need integration of those 5 elements, and one of the key messages is you've got to have all those 5 working to make it work. So we set up Integrated Energy a few years ago. This is our mission statement: enable safer, more valuable operations and projects which are better for the people working on them and the environment around us, using those 5 elements, the 5 separate elements. These are some of the companies we've worked with over the last few years. We're currently working with Woodside, Santos in Australia, and Calibre as well. And quite a lot of global experience. As I said, this is something that's fairly new to Australia, and we're trying to bring the global expertise into the growing resources and energy industry here in Australia now. Typical functionality, what you see in integrated operations, a lot of integrated planning, that whole linking of 6 months to 3 months to monthly to weekly to daily plans, a lot more integrated planning with maintenance, trying to optimise all that on a short-term and longer-term basis. The remote access to technical expertise, one example would be GE and Nuovo Pignoni have a 24/7 operation centre in Florence, I think, which monitors the entire fleet of gas turbine compressor installations around the world, and they have 8 people, I think, on that, manning that 24/7. So if you're someone like Woodside and you have GE turbines offshore, you want to tap into that real-time 24/7 support, and they want to be able to see their machines online as well. You can talk to them in Florence. They can say, okay, you need a maintenance change out in a month, and you can have those people at your fingertips, whereas traditionally they've been at arm's length, and you spend a lot of money getting people over and flying them out. Production coordination across fields, pits, terminals, where you've got a whole lot of series assets that all need to be coordinated. It's a big part of it. Real-time data monitoring and support 24/7, I've mentioned. Instant emergency response is a big one. When you get an incident in mining or oil and gas, often people are very reactive. You sort of stumble to get things together. You've got to manage your coordination with everyone from the press to regulatory agencies to emergency services. And ideally you want to have that set up as a way of working so that you can snap into that incident response mode quickly rather than have to change and suddenly go to a new way of working. Developing people, we've heard about that a lot over the last day or so, the access to the skill sets, the diminishing skill base. This is particularly a problem in Western Australia. I think the Pilbara and Kimberley have less than 50,000 people living in them, and so to supplement the huge big mega projects up there, it's what's become a FIFO culture, which has its own elements of good and bad. But ultimately, if you can run more work from Perth, you can then tap into a different skill set. That's one of the big key drivers that Rio had. Control systems, troubleshooting and modifications, that can be done in real time, medium term, long term. You basically get a lot more information, a lot more real time data, and you can act accordingly. So it's helping that decision support space. Model-based operation support, you have a lot more simulation, a lot more optimization going on. You're basically, with your mine or your oil and gas field, you're trying to be on the front foot. You're trying to be predictive rather than reactive. Traditionally, you have aspirations to do so, but generally you're on the back foot with maintenance changes, technical changes, all those things, always trying to play catch-up, and it's expensive. Planning, executing and learning from drilling and well operations, that's into your knowledge management, how you incorporate learning into your work processes. Losing good people, losing experienced people, how do you capture that knowledge? Remote monitoring support by suppliers. I mentioned the GE Pignoni example before, but it can be wastewater treatment, it can be PLCs, it can be logistics, all sorts of things like that. Inspection and integrity management is a big one, corrosion monitoring, etc. Project design, construction, commissioning support, factory acceptance testing, site testing, all those aspects, not having to fly lots of people out all over the world to witness tests. And collaboration with customers and suppliers. So you're trying to bring your key vendors and suppliers in much closer, working with them more, not on a 24/7 basis necessarily, more on a 7-day basis perhaps, whatever's appropriate to that particular job. So the key way of working is quite an important concept here. It builds from the centre. You really try and look at those processes in the circle there that are real-time. Your real-time, right up to the date, well pit optimisation, production optimisation of systems, drilling performance. You might call it value stream optimisation, or your defect and fault resolution. The stuff that's happening in minutes and hours, where you lose 5 minutes will mean 5 minutes lost production, which in oil and gas is a huge amount of money. So you're looking really at those process are key. And then you move out to the hours and days processes, slightly more strategic, then into the days and weeks, and perhaps the weeks and months and years. So the focus is on that core, and then you slowly move out from that core. And that's how you set up your way of working and your work processes. So it's a different way of working based on the criticality of time response to decisions. This is just an example of how you be connected to offshore. This is a partner in the middle there, Ketil Barkved, who works in Norway. This is in Stavanger, and this is connected permanently to the, I think this is the Ekofisk, Philips Ekofisk platform in the middle of the North Sea. So where you're working there, you're all the time, constant full-time video conference with the control room and the offshore installation manager in Ekofisk offshore, which is about 200 kilometres. So it changes the dynamic, the way people work, this traditional sort of separation between onshore and offshore. So I'll go through two examples. The first one is BP Tangguh. We've heard a lot about the other side of PNG. This is the west side, the West Papua. It's a brand new greenfield LNG development run by BP. So you're starting with nothing, practically just a small jetty, and then trying to build an LNG plant with about 2 trains. So a big desire to run more from Jakarta if possible. You've got 3,000 kilometres. It takes about 2 days to get anyone out there. So logistically very, very challenging. A lot of environmental and concerns about people's footprint and why you have to have so many people out there and so much infrastructure. And obviously very expensive and hard to coordinate. So how do you run that kind of project from Jakarta? Is it just an effort of technology, or do you need to do more than that? And the answer is obviously the second one. You can't just it's not just an IT project. You've got to change the whole way of working to support the project real-time, 24/7 from Jakarta. That's a brief look at the project. It's an LNG plant with 2 jack-up rigs offshore, Forwata A and Forwata B platform. There's a big drilling schedule, and then followed by the production, which is currently underway. The key benefits to setting up a real-time centre in Jakarta was reduced HSE exposure, flying people out there, and safety in such a remote area. Less rig days and people on board and flights to get out into the jack-up rigs. There was a high amount of restriction on the number of beds on the jack-up rigs, so they literally couldn't get the people out there, staying on there that they wanted to. So they had to think of different ways of working. How to get faster drilling, more effective drilling, and targeting 0 to 5 days per well, which is quite ambitious, and faster and better informed decision making. So as you're drilling, how do you get that support from people in Jakarta, your expertise maybe in Europe or Houston, to help you as you're drilling? And obviously there's not a lot of infrastructure out there, so this was done all over satellite. This is the concept we developed for Jakarta. This is a normal place of working for everyone. They come into this area. You've got the first well in the area, and then looking back through the other, on the right-hand side, the second well, and there's a collaboration room at the back. And looking from the back, that's the collaboration room there. So this is where people go every day to work. You might have planners. Traditionally they were offshore, they're now onshore. Might have the installation manager as well, people cycling through, graduates coming through. It's good for training, it's good for attraction of people and development of people, because they're seeing the whole asset in a highly visual environment. This is just some architectural designs we did. As you can see, you do it quite detailed. You list everyone's where they're sitting and their function, try and get them working together, think about all the interactions and the way of working and the decision makers that need to be around in that space, and then breakout rooms for collaboration, meetings, etc. And this becomes a normal way of work. So it's the place. It's different because it's very open and collaborative. So you need the right people and the right incentives to get the quality of skills to work in that environment. Similarly, on the jack-up rigs, to make a similar look and feel, those offices were done in the same way, with the same kind of furniture and the same kind of look, so that as people were rotating through, they recognised the look and feel of the collaboration centre. And that's what it looked like in real life. Large visual screens where people can see what's going on in real time and have options to change, whether it's a meeting or needing some data up there, or to VC with the offshore room there you can see. And this actually paid off in a few months, because as they were drilling the second well, they had a major overpressure incident in the annulus of the well, which put the whole field at risk, and they managed to recover in 3 days. And in the words of the drilling manager, if they hadn't have had that way of working, it would have taken another 7 days, where the whole project was at risk with this overpressure. So because they'd set it all up to be in incident response mode all the time, when this incident did happen, they were ready to they're ready to act accordingly. And there's obviously parallels there with Montara and Macondo, with the big incidents that happened in recent times with oil and gas, which have obviously changed the way people see incident response. So the result here, the hard benefits were improved recovery from non-productive time incidents. That could be just a small device out or a machine or a sensor, but you're able to get back up again because you can get the all clear. And people are communicating better onshore and offshore. Greater connectivity between rigs and office was a big cultural issue. Faster handling of abnormal situations. Yes, you manage normally, but you manage by exception is where you're traditionally reactive, but you're able to have the right people and the right decision makers, see the right information, get that sent to them, get their heads together wherever they are in the world, and react accordingly. That goes into the next point: faster access to experts. Improved deployment through adoption of data standards is a big one. We've seen that a lot in oil and gas, where common data standards, common transfer of data is helping suppliers and operators as well. And safer and better development of people, and paid back in 3 months. So the Indonesians like this because it helped develop their people. Coming through Jakarta, they could see and be part of a very, very remote LNG plant where they would not normally be able to get people out there to see it. So it's highly visual, highly informative, huge amount of data coming into that centre, and it's used for training. It's good for attraction and retention of people. So it has very good benefits on that side of things. The second one I want to talk about, a bit closer to home. This is a big field development for Woodside, who runs the Northwest Shelf project. Has been doing so for about 25 years in Western Australia. This is a new LNG greenfield development they are looking to develop. It's multiple reservoirs in deep water, long production lifetimes. This reservoir has about 50-year, 60-year life. Deep water drilling and production facilities. The drilling units are about 600 metres of water, about 350 kilometres off the coast. And there's a manned central production facility on the continental shelf at about 200 metres of water. There's nothing there currently on the LNG site. So pipelines to shore and communication, we had to make a decision between satellite or fibre optic cable. And because of the integrated operations business case, there was a decision made to run fibre optic cable through the whole field. So that basically gives you massive bandwidth to then run all your real-time data. There's multiple LNG production facilities, and there's extreme remoteness, both from each of the assets themselves, but also from all the expertise back in Perth. So what Woodside was looking for was a sort of step change in the way you run things. How do you go at this same way for the second or third time? They've just started up Pluto now, but how do you then look at a new greenfield and say, how do we do things in a step change way, not just little incremental improvements? So how do you deliver a step change in production performance and life cycle value by transforming the LNG development with intelligent operations? That's really what IOPS is about for them. So central to their concept of IOPS is a Perth-based IOPS centre to centralise real-time control, monitoring, tactical and strategic operations, and that whole decision loop of monitor, measure, model and decide. Get the right people with the right information, the right data, the right people, the right time, if you like. And typical benefits there similar to what ones I went through before with Indonesia example. So IOPS is in the model for proposed development. It's part of the IOPS strategy, part of the operations strategy, and its key elements are there: predictive decision making driven by intelligent real-time data and diagnostics, reduced logistics requirement, collaborative support from remote centre and OEM locations. And Integrated Energy is a company they've brought in, and we are now managing the IOPS process for them. I'll go to that one. This is the concept for IOPS. You've got the central concept there. I'll go through in detail soon there of a Perth-based centre. Down the bottom there, you've got fully instrumented reservoirs and wells, planned and constructed and operated with visualisation, collaboration, real-time data, and minimum manning. You've got some dry tree units, what are called drilling units, over there on the bottom left-hand corner, which are not normally manned. So they run with about a 6-weekly visit from a crew for about 4 days. But essentially they've got to run unmanned for most of their life. So that's a big issue. How do you get visual awareness of what's going on those drilling units without having people there? Up on the top left-hand corner, that's the central production facility where you do some basic separation. But that's still 350 kilometres offshore. So that's remote support and management and control. That's the minimum manning and remote control. Probably remote monitoring to begin with, and then slowly stage to more and more remote control as you get more confidence and knowledge of that asset. Fibre connectivity and full-time video conferences is ubiquitous for all this, so people are connected all the time. You see all the time video screens of people working offshore, and it's as if they're in the same room from day one, and that changes the way people work, it changes the culture. It sort of breaks down that us and them kind of philosophy. You're connected in with the LNG plant as well, the plant IOPS facilities. Again, there's a minimum manning philosophy there as well, remote support and supervisory control, and into your suppliers and partners as well. We've identified about 20 key suppliers and vendors who you want hooked in, not necessarily 24/7, but you want them available to help with monitoring and advice and condition-based monitoring models as well. So you're always trying to plan and think ahead, and also back to Woodside corporate facilities as well. So we worked for a few weeks last year to look at the key elements. You probably can't read this too well, but it's basically saying, let's look at what are those activities you're running where the integrated operations can help the most and they're critical to operations. And that's what's going to put you in the sweet spot up at the top right-hand corner. So some of them there would be supporting field personnel. Woodside feels today that their field personnel go out there and they hope it's the right pump, they hope the isolation's there, the permit to work, but essentially they don't have the tools on hand when they're out in the plant to see what's going on. They want more awareness of what's going on. Is this the right valve? Is this the right part? When's my part coming? Is there work permit in place? When's that scaffolding going to be licensed, etc.? Condition monitoring is a big one. Inspection, integrity management, remote access to technical expertise I've spoken about, continuous improvement, integration planning. So these are the key areas we're working at the moment to work with. Timely tactical decision making is another big one. This will be sort of an example of a detail that we work up. This is the main areas we've been working about: the LNG plant itself, the IOPS centre, who's working in those facilities, how many people are there, and what are their interactions. So the light blue shows just within a facility you need more collaboration. You can benefit greatly from people working better together, but then the dark blue line symbol, those people can then work closer and more collaboratively with people offshore or remotely in third parties where they be around the world. So you're trying to get a lot more sense of who's going to be where, and this is obviously going to change with time. So this is the peak manning at about when you're ready to start up the facility. That's obviously going to ascend and decline as more people move and the asset becomes more mature. So there's a lot of work goes on in there. And this is a more detailed picture of the IOPS centre itself. What you've got there is, I can't really show you too well with the pointer. I'll try. No, not so good. But around the outside there, you've got the whole value chain from the well and reservoir all the way through to shipping. So the outer arc is more strategic engineering. The inner arc there, the two workspaces that you see, the closest one is the operation panel where the controllers work. As if they're offshore, they're now coming back onshore and running it all from Perth. And the other area on the other side there is the real-time drilling and reservoir area. There's a huge amount of drilling reservoir work on this project, so it's going to be 3 of the first 7 years, I think, they're drilling. I'll do a bit of a close-up so you can see close to that control area. So this is a normal place of work for the control operators, the installation managers, and your key, what you call your tactical group, who are on the arc just on the 12 seats inside the glass there. So this is a normal place of work for the operators. They come in there in their overalls or whatever. They have the security pass, and it's run as an operations centre with a highly visual environment, lots and lots of screens. If need be, that glass with a press of a button can be made black and shut off if you need to do incident control or concentrate on a certain aspect of the plant. So it's not really meant for people to walk in and around. But it's meant there as a big visual environment where everyone can see what's going on. The two pods on either side there, where you see like an egg-shaped, they're immersion pods. So if we walk in there, we can see a 3D model of the offshore platform or the drilling rig. We can walk, we can say, okay, show me the work permits, show me the maintenance on that. We can do a simulated tear-down of a pump with our colleagues in Houston or whatever, and meanwhile none of us are actually there and the pump's running. So you're trying all the time to do stuff virtually and offline without actually going up there and having guys fly offshore and having to sit there and point at the pump saying, that's the one I'm talking about, which is traditionally the way people get expertise together. This is the other side. This is the drilling and reservoir area. This is all a basic concept that we've built up, which we're now looking to refine. It's the same thing, very highly visual. You've got a whole lot of what we call form factors there, so people can see stuff on big screens. You can see things on like an iPhone-based kind of idea, an iPad, smart desks, that sort of thing. But the idea is that I can get all the information I need. Visual information is very important. It gives people a lot of situational awareness of what's going on. They can see that I'm talking about that pump and I'm talking about that valve behind the pump, which is hard to access and needs scaffolding, etc. We found that's often where decisions and mistakes are made. People don't understand if you're talking about an area we can't get to because it's too remote, and I'm trying to explain it. It's because people don't understand what's around it. So the visual side of things is very important, as well as the traditional documents and data that goes with it. That's just one final view of the operations centre. As I said, intentionally set up as a workspace where people wear overalls, and that's the mindset there. But obviously supported close by all your strategic engineering, your safety people, incident control, reservoir engineers, your management, everyone on the floor who needs to make a decision. And the key thing is to get that decision loop and get the information to the people and have them able to make decisions quicker. So smarter decisions faster is a sort of a catchphrase, if you like. There's some of the baseline technology elements. On the right-hand side there, a simulation. I've spoken about operation simulators, which work in very seconds and hours, very short time space. Dynamic process simulators, further out to production simulators, reservoir simulators. So you can have people employed rather than trying to play catch-up. They're trying to work out what-if scenarios. What if we do that? What if we need to balance our LNG with condensate? Or it might be lumps with fines for a mining analogy. And that's all supported on the left-hand side, behind the scenes. Really, it's all meant to be obviously working very easily for the end user. But behind that, you need to build up very, very strong PLC control system, condition monitoring, engineering database, working up to your process historian, data validation, optimization, simulation. So there's a lot of stuff goes behind it in the IT space to make all this happen. Some of the elements I spoke about there, whether it's an operator in the field with an explosion-proof industrial iPad, etc., or a client, or a big screen, you can, all your data sources there, GPS, SAP, OpenSpirit, which is reservoir, MetOcean data, OPC, WITSML is a drilling transfer data standard. All that can be piped into your operations centre and people can see what's going on. And also the field personnel can see what's going on. So that everyone's got access to the information. Obviously you've got to monitor security, you've got to think about how much you want to give your vendors and third parties, but it's that kind of environment where people have a lot greater awareness of what's going on. Like I said, without having to go out there. So, pretty much to summarise, what I've done is engage objective third-party consultants, that's us, to help the team articulate a shared vision for the project, invest time and resources in a participatory conceptual design phase, which is what we've done. And the key thing there is to go into the company and have them own it and work it up. It never works really to come in with a solution saying we've got the answer. All these companies have worked internally to say, okay, how would we do this? How does it fit our culture? Rather than sort of saying we've got a cookie-cutter approach that works for every company. And it's very important to get the right champions at a senior level, the right grassroots advocates, etc. And it takes a long time to get people converted. Resistance to change, new ideas, new technology, a lot of resistance and questions that need to be worked out, a lot of education and things like that. It tends to be a long journey, so it's not just a quick fix, particularly the people side of things. The technology is much easier. It's not very difficult to get technology in, but to get people on board and working, running with this and really believing in it is much harder. So finally, intelligent operations is a way of working which can enhance HSE, substantially increase project value and support development of people from modest project spend. It's proven in major energy and resource developments and enabler for remote operations approach. A staged approach to design and implementation is recommended, which addresses people, process, organisation, the physical environment and technology, and in engaging in objective consultancy objectives helps the team articulate a shared vision and drive progress. So I hope that's given you a sense of two examples from oil and gas. We are working currently with Rio. Spent a lot of time out at that operations centre I mentioned just earlier in Perth, which is quite impressive what they've managed to do there. And again, that's quite a long-term process for them to understand how to optimise that. They've got a certain way, and then you keep improving and keep improving. That's all I have to say. Thank you very much. If you need any questions, come and talk.
In the interests of time, we might move on. Thank you very much, James. Our next speaker is Dave Timms, who's the Managing Director of Endeavour Minerals.
Thanks for staying on, everyone. endeavour has put 4 properties together for an IPO, which we hope to float in about 2 months' time. Our aims are to produce Australia's first platinum mine here in Broken Hill, and secondly, to produce Australia's largest low-grade nickel sulphide mine at Mulga Tank, similar to the Mount Keith low-grade deposit there. And our 4 properties, as you'll see here, at the Commonwealth Mine, which we own 100%, we have some 50,000 ounces gold there, so we hope for some early cash flow from that one. But the main driver here is the Broken Hill Platinum project, which we farmed into, and we farmed into Mulga Tank from Golden Cross while they're completing their feasibility study on their Copper Hill project. At Broken Hill, we have some really high-grade gossans, some of the high-grade gossans in Australia. And we also see Mulga Tank in Western Australia is in a part of the Greenstone Belt, the most easterly part. It's a little virgin area that really hasn't been explored much since Broken Hill BHP first explored it in 1982. And finally, Rangatira, we have the 50-kilometre gold belt there, which we picked up starting from the Victorian border, where we've got 20 old gold mines and prospects, and including Rangatira gold mine, which was previously explored by BHP. So this is the board of directors, a very experienced board, and we move to Mulga Tank, where we're talking about the easternmost part of the Greenstone Belt in WA, and you can see that we're about 100 kilometres from the new Tropicana multi-million ounce gold deposit close to the Fraser Range. This is the tenement that we have there, and you can see that the Anglo are building their Tropicana Kalgoorlie Road through our tenements. But this is a magnetic image, and you can see the very intense white streak at the top there, and that is a banded iron formation that BHP discovered back in 1982, and they drilled one hole into it. And as you can see, we've developed a gold soil anomaly on it, and as you know, that a lot of gold mines do occur in fact, half the world's gold properties occur in these fold belts, and a lot of gold deposits occur in the banded iron formations as well. So we have high hopes for that soil anomaly. But the major project there is this huge 4-kilometre by 3-kilometre serpentinized dunite, and so it's mineralized with sulfides, and the 3 holes that have been drilled so far have all collectively drilled through 200 meters thickness of mineralized serpentinized sulfide material, which collectively assays over 0.2% nickel, but some of the grades go up to 2% nickel. So our objective is to drill some more holes there and do some downhole EM, because that surprisingly hasn't been done before, and the pyrrhotite there is a very good conductor and can contain up to 5% nickel, and in fact is the basis of the Sudbury nickel in USA. So that's our main target there. And now we come to Broken Hill, and we have a 35-kilometre belt there of, as you can see, all those little squiggles are ultramafic lenses or fault. And so we can see all the way from the top there, we've got the Moorkai prospect, and at the very bottom, 35 kilometres there, is the little Broken Hill Gabbro. But wherever we get outcrops of ultramafics, we can usually find some very high-grade gossans, and so we're going to cover them systematically all through and drill them. Now, our best prospect here, we have 7 prospects which we've drilled before and got good grades from, but as you can see here, the gossans, when we collected all the gossans from there, and Geostandards tried to put a standard together. They collected 120 kilograms of gossan, and it averaged 19.6 grams per tonne platinum and 50 grams per tonne palladium. Plus, it went 3 grams of rhodium, and it also had 4.1 iridium and 3 osmium and 2 ruthenium as well. So it's got the whole suite of platinum group metals. And every time we take gossan samples, as you can see, the rock chips are very high grade there. But I'll show you a section that we drilled through there, and you can see the old holes that CRI, when they first drilled there in 1970, they didn't really firstly assay for platinum, but then finally did, but didn't assay for palladium. And so some of those holes haven't been assayed, as you can see, but more recent holes, we got GMS 06, and that gave us 2 meters of 10 grams of platinum and 23 grams of palladium, plus 5% nickel and about 6% copper. So, but one of the amazing things that we've found is that you'll see in that section, within the ultramafic, we're getting disseminated platinum group metals where you can't actually see sulfides. And so we've found evidence that you can go as low as 0.01 copper or nickel, and we still get a gram of platinum group metals. Now, platinum at the moment, 1 gram is worth $60, so it's really worthwhile exploring for that. And so we hope to do some initial down-the-hole probes to see what qualities match the values that we have down the holes. And so this, what we'll do is systematically is drill all the undrilled sills that we can see. You can see this is 9 kilometers there of sill, and we're going to systematically drill those. And so we'll go on to now the Commonwealth mine, and you can see that we've done a survey by Steve Gebel, and he says it's very profitable, and so we'll pursue that one to get an early cash flow. And finally, at Rangatira Gold Belt, we have 50 kilometres close to the border of Victoria, and 20 old gold mines and prospects, and including the BHP prospect at Rangatira Gold Mine. And so we have really a lot of work to do, and it's all very exciting as far as we're concerned. So if anybody's interested in a prospectus, I'd be very pleased to have their name and tell you all about the rest of it at our booth. So thank you very much for listening. Thank you.
Thank you, Doug. Our next speaker is Geoff Lowe. He's the Managing Director of White Rock Minerals Limited. Geoff.
Thanks, Lindsay, and good afternoon, everybody. Today I'd just like to give you a run-through about White Rock Minerals. We're a junior gold and silver exploration company. We're based in Victoria, and our projects are in northern New South Wales. The company was formed about 12 months ago through a demerger of assets out of Rex Minerals. Rex are major copper explorer in South Australia. The primary project that Rex demerged out was the Mount Carrington gold-silver prospect in northern New South Wales, and this is our cornerstone project. The project covers an historic gold and silver mining district and contains a current inferred resource of about 190,000 ounces of gold and about 10 million ounces of silver. We believe we have considerable potential here to not just expand this resource into something much larger, but also to look for new greenfields discoveries. We have a large tenement holding here, which hasn't really seen a lot of exploration over the past 15 years, and a good opportunity for us to apply some new ideas, new technologies to that ground. We listed in October 2010. We have a current market cap of around about $17 million. We're trading at about 30 cents, 56 million shares on issue. We have around 2,000 shareholders, and the 80% of our shareholder base is retail. Cash balance is just under $7 million as at the end of March. Our board and management, we have quite a strong team. We have about 150 years of combined exploration and mining experience, covering exploration geology, mine geology, engineering and corporate finance. So a very good team to certainly back me up. Well, there's in excess of about 200 listed Australian gold explorers. There's really only a handful of explorers of our size who are really exploring for silver in Australia. There's probably about a dozen or so. And silver is one of the assets in Mount Carrington that we think is going to hold up a great future for us. We have 10 million ounces in inferred resource at the moment, but we see considerable potential to grow that. And I think it's something that I'll show you in a minute that is quite valuable. Our projects cover around about 800 square kilometres in the New England Fold Belt, just on the southern side of the Queensland border. Two main projects up there, Mount Carrington covering about 600 square k's, and we have another project called Gyra, north of Armidale, covering about 200 square kilometres. Two current operating mines in the New England Fold Belt, both operated by Newcrest at Krakow and at Mount Rawdon, with a combined production of just under 200,000 ounces a year. Krakow is a high-grade underground epithermal vein style deposit. Mount Rawdon a much larger low-grade open pit, intrusion related. Both of these styles are very similar to the styles of mineralisation we're exploring for at Mount Carrington. Our major aim over the next 2 to 3 years is really to develop Mount Carrington into a new mining operation. To do this, we want to achieve three main objectives. Firstly, expand and upgrade the current gold and silver resource base with systematic drilling and resource modelling. Secondly, we have a number of advanced prospects in the district which we've developed over the past 2 years with exploration completed by Rex Minerals when I was with Rex, and we aim to move those into resources within the next 6 to 12 months. And thirdly, we're implementing quite a large regional exploration program, very grassroots, mapping, rock chip sampling, stream sediment sampling, to develop a pipeline of targets for drilling over the next 12 months. At Gyra project, we see potential here for large porphyry copper gold mineralisation. The project is much less mature than Mount Carrington. We've done some drilling there and some geophysics. The indications are quite positive still, but a much earlier stage for us at Gyra. Zooming into Mount Carrington, we focus in here. We're located about 2 hours inland from the east coast and about 3 hours drive south of Brisbane. The project's located on a bitumen road. We have good local infrastructure and services. We can fly to within an hour and a half of the project, and we have a railway within an hour of the project as well. The project area covers the old Drake goldfield, which many of you would be familiar with. The field was discovered in the late 1800s with minor production of gold, silver and copper through small underground handheld mining. In that period, in the 1980s it was revitalised, and over an 18-month period there was about 20,000 ounces of gold and 400,000 ounces of silver, developed from about 5 small, very shallow oxide pits. We have 600 square kilometres of exploration licence holding here, covering the Drake Volcanics themselves. Modern exploration here is very, very limited. As I said, there's really been no regional exploration on our tenement package since about 1994, and really 95% of the drilling completed to date on this area is less than 100 metres depth. So not just a regional package for us to explore, but a very big space below 100 metres on some of the known prospects that haven't been tested as well. Zooming in now to the main mining district we have here. As I said, we have a resource base of 190,000 ounces of gold and 10 million ounces of silver. They are located at the base of a number of the small pits that were mined in the 1980s. So you can see here within this white box, we have 160,000 ounces of gold under the central pits. We have the Lady Hampton silver resource of 2 million ounces just to the east there. And off to the southwest, down the left-hand corner, we have the White Rock deposit of about 8 million ounces of silver. In addition, what you see here is we also have quite significant infrastructure. We have a tailings dam, 500 million litre capacity tailings dam. We have a 300 million litre capacity freshwater dam, which we own. We have high voltage state power to the site, offices and accommodation. And we own these assets 100%, and these assets all sit on granted mining leases, which were renewed to us last December for the next 10 years. So very, very valuable to us. What we don't have is a mill, but assuming we can expand the resource base to the size that we think we need to get it to and have some regional success, we're very well set up for a future mining operation here. As I mentioned, the previous pits were quite small, shallow oxide pits. They only went to a depth of about 30 metres, stripped off the supergene zone, and very, very limited drilling underneath those pits, targeting extensions of those known deposits. What we have here is a summary of our resource base. It's currently made up of 5 shallow deposits. We have 3 gold-dominant deposits at an average grade of just under 2 grams per tonne, and 2 silver-dominant deposits with an average grade of about 60 grams per tonne. The resources were all re-estimated in about 2008 by Rex Minerals using all historical data and drilling that was done in the 1980s. And we've then gone ahead and validated these resources with our own drilling and our own resource modelling, which is currently underway, and that's holding up very, very well. We believe that we won't need to do a lot of additional work in order to upgrade these resources from inferred into indicated, and we've got some quite clear targets planned for expansion drilling as well. Just as a side, at a market cap of $17 million, which is where we sit at the moment, our enterprise value per gold ounce is around $50 an ounce, and for silver it's around about $1 an ounce, so very, very cheap. Zooming out now from the mining leases, what we have here is a magnetic image covering our tenement package. Within the centre of this image there's quite a pronounced circular Lowe feature in here, which is easy to see. If you come and have a look at the posters in our booth, we can show you this in more detail. We interpret this to be a volcanic caldera complex in a setting similar to a lot of other high-grade and well-known gold and silver districts, particularly in the US and in the Pacific. We're doing quite a lot of work on this zone here at the moment. It encompasses all of our resources and about 95% of our regional targets. So we're currently mapping this in a lot of detail, as well as undertaking a lot of rock chip sampling and prospect generation. And this work's turning up some very, very encouraging results for us, particularly in new areas that haven't actually seen any drilling. We're getting encouraging surface rock chip samples up to about 100 grams per tonne gold and at a peak of about 2,000 grams per tonne silver. That's definitely an outlier sample, but some quite solid anomalous gold and silver at the surface on a number of prospects which we'll be drilling later this year. Just zooming into that circular feature, you can see our structural analysis here and a number of prospects defined as well. So in summary, we're pursuing a fairly clear strategy for gold and silver resource growth, new discoveries and value creation for our shareholders. In the short time we've been exploring here since floating, we've demonstrated that there's great potential to expand the current resource base as well as find some new prospects. We think we have a very solid strategy going forward. We have a reasonable amount of cash in the bank to implement that strategy and a good board and management team to back that up. So if you'd like to come and see us at the booth, we can give you a bit more information. Thank you.
Thank you, Geoff. Our next speaker is Andrew Tunks, who's the Managing Director of ACAP Resources. Andrew.
Thank you, Lindsay. Thank you, everyone. Look, I know it's late in the day, and the bad news is I only get to talk for 10 minutes. The good news is I only plan to talk for 9 minutes and 45 seconds. So can you all just stand up for a couple of seconds, please? Because everyone's going to sleep. So stand up, have a stretch, wake yourselves up, because I've got some important things to tell you. Thank you. ACAP Resources is a uranium-focused company that works solely in Botswana. Okay, disclaimer. We've got an experienced board that have brought over 12 projects into operation all around the world. In today's presentation, I don't have time to go through the whole board. Suffice to say, we've got a new chairman, recently joined the board, Robert Pett, the founding chairman of Resolute Gold, and he's been a huge assistance to us in the last year or so that he's been on board. Just want to show you a little bit about the company now. We've got about 200 million shares on issue. We've got about $14 million in the bank. And I suppose looking at the share graph is something that I'll refer back to a little bit later. As you can see, coming up towards Christmas, there was a substantial rise in the uranium price and a concurrent rise in our share price. We raised $15 million or $16 million in December at 42 cents, and we got as high as 70 cents. Then, of course, there was the earthquake in Japan, and it's had a massive effect on the entire uranium industry. I'll be talking about that extensively tomorrow in a keynote presentation on the nuclear industry. So if you're interested in the facts of what happened at Fukushima and what I believe, in my own personal opinion, is going to continue to happen in the nuclear industry, please come along. But obviously, that has decimated the value of most of these uranium stocks. Okay, not just us, but everyone. We're about half the market cap that we were before the earthquake. Okay, now I haven't got time to go into this next slide in any detail. It really refers to the nuclear build that's planned around the world in the next 20 years. And effectively there are about 430 reactors operating in the world at the moment, okay, and that number is expected to double over the next 20 years. And I'll talk about this extensively tomorrow, but post-Fukushima, okay, several large countries, and the important ones from the Nuclear Build Centre, such as China, India, South Africa, in fact everyone except Germany pretty much has agreed, UK is another one who said that yes, that they will continue on with their nuclear program. There are some short-term supply issues with uranium. ERA is underwater, Cameco is still struggling at Cigar Lake, etc. So we expect the price, which has only fallen about 15% from its highs, to rebound soon. And we think now is a great time to buy uranium stocks. Tell you a little bit about Botswana, which may or may not be a country you're familiar with. It's a landlocked country in central southern Africa to the north of South Africa. It's well known for its tourism. It was in fact originally the Kalahari Desert, populated by the Bushmen and the Tswana tribe. Okay, it's a large country about the size of New South Wales with a population of about 1.5 million people. So it's empty. It has the highest GDP per capita head in Africa, based solely on mining, pretty much, and diamond mines in particular. But of course the diamond mines are finite and the government's trying to diversify away from diamonds, so they're very encouraging of new projects, and we are one of the largest projects on the horizon in Botswana. Although it's a third world country, obviously, and it has lots of issues, it does have first world facilities, and in particular it has fantastic infrastructure, which I'll show you about a little bit later. Where are we, and what am I going to be talking about today? And I love these sticks because I used to be a lecturer. Well, I'll be talking about the Letlhakane project here, which is between Francistown and Gaborone. We've got 7,000 square kilometres of ground elsewhere in Botswana, but I'll really only be talking about the main project today. We released recently an upgraded resource figure. This places us to be around about the 10th largest uranium resource in the world now that's not developed. Okay, so we actually increased our resource by about 40% just in the last few weeks. Of course, it was post-Fukushima and the market said, meh. So I was pretty delighted with that response. Nevertheless, it's a large, low-grade deposit that's amenable to large-scale open-cut mining and heap leach processing, and I'll go into that very briefly. It is low-grade, there's no doubt about that, and that's the way it is. However, we've recently had some fantastic intersections, and we are targeting some higher-grade parts of the ore body. Recently had 20 metres at 450 ppm and 6 metres at 1150 ppm. This is the resource model as we know it now, or where we've drilled. We've drilled about 90,000 metres so far since 2006, and you can see where our initial development, which we're going through our feasibility studies, is planned. And you can see where the drilling is densest in these areas, and they'll be our original pits. It's important that you look at the scale of that diagram. This ore body is about 9 kilometres east-west and about 15 north-south. Okay, it is enormous. It is completely open to the west, and it has the potential to continue to double in size. All of that ore is in the top 70 metres. Where does that put us in the world? I don't know what you can read those names on that graph, but effectively we're the orange bar, okay? And there's certainly some bigger projects ahead of us, there's no doubt about that, but some of those projects, like the ones I've labelled in green, I think have environmental concerns. Viken, Hagen, Jabiluka has huge environmental and land right sort of sovereign risk. Cigar Lake has huge issues with underwater. Kjernfeld in Greenland is above the Arctic Circle. Now, after 25 years in mining, I can tell you one thing, mining's hard. Mining above the Arctic Circle must be bloody hard. So I think our project is well situated to be developed. As I say, it's shallow, it's flat, it's simple. It's in the Karoo supergroup. They're flat dipping at about 1 degree, and you can see the top of the resource there, maybe a metre of sand, and directly into the mineralisation. The mineralisation outcrops at surface. In terms of infrastructure, the project is right on the main highway. We drill right up to this highway, although where we get there, it's probably not quite economic. Parallel to the highway is the main countrywide 2,020 volt power grid, and we can have power on site for less than $5 million. Parallel to the railway line is the power line is the railway line, Cecil Rhodes' Cape Town to Cairo rail link, which goes north into Zimbabwe and Zambia and south into South Africa. We'll bring all our processed chemicals in on the rail link. And finally, the ground itself is flat, featureless plains. There are no endangered bats or birds or anything else out there. There are no people. Botswana is largely uninhabited. It's Crown land, and we own the surface rights to the land as well. We've done a lot of work in our feasibility studies over the last few years showing the metallurgy is feasible. We initially had lots of problems with the primary mineralisation. We have 3 types of mineralisation. I won't go into that today, but we had initial problems with the primary. We now get better than 80% recoveries in all our ore types. So we're well down the feasibility track, and I expect to have some numbers to release around the middle of the year on OPEX and CAPEX for the deposit. You know, effectively what we're looking at is a super large low-grade heap leach. There'll be really large pits, kilometres across, 30 or 40 metres deep, and surrounded by leach pads. We'll have a central processing facility. So we'll have leach pads at the various pits, and then we'll transport the pregnant liquor back to a central processing facility. We've also got great water supplies about 20 kilometres to the west, and we've already proved up and have commenced our EIA on the bore field. We've also, in fact, I should mention this, have already finished our environmental and social impact assessment of the site. So we're well down the path. The team that we've developed, we believe, is a fantastic team. We were largely gold people when we started. We've spent a lot of time improving our uranium skills. We've brought in worldwide experts to peer review our projects, and we've had some very kind words from people like Cameco who've come and looked at us and think we're doing a good job. We've got a great board and very supportive of the work that we're trying to do. Everyone who works for me lives in Botswana. There's no fly-in, fly-out. We don't believe in that. We have to engage in the local community, and we have to be part of that, and we employ a lot of local people. We've got fantastic metallurgists working on the project through Lycopodium, and we think this is a great project. We've discovered the only JORC-compliant resource ever found in Botswana, and we will be the first uranium mine in Botswana. I've been working on this project for 5 years. I believe it is a fantastic buying opportunity now at 30 cents, and I would encourage you to join our register. Thank you very much.
Thank you, Andrew. Our next speaker is Gavin Swart from BMAX Resources. Gavin is the Manager Operations for the Murray Basin.
Good afternoon, everybody. What I'm going to talk about today is the evolution of BMAX Resources and our parent company, Crystal. I'll give you an update on where we got to with our Murray Basin projects, particularly Ginkgo and Snapper. I'll talk about our resources and some exploration, and I'll talk about the future. In the early 1990s, BMAX was a junior gold explorer in the area. Mid-1990s, whilst looking for gold, we found heavy minerals. 2003, Crystal got wind of that and wanted to get some of it. 2004, as a result of that, we acquired the heavy mineral assets of Sojitz and Sons of Gwalia, which included Cable Sands over in WA, which was a strategic purchase. Cable Sands had a mineral separation plant. They were winding down. We could acquire assets fairly cheaply, and as a result of that, minimise capital spend. 2005 and 6, Pooncarie Stage 1, based on Ginkgo, was commissioned. 2007 and 8, we obtained the statutory approvals for our Snapper mine. In 2008, Crystal acquired 100% of us, and we were subsequently delisted. There's a correction on the brochure. We're not on the stock exchange. 2010, we commissioned the Snapper mine. So, pretty interesting evolution, and to try and jam-pack 10 years of history and 30 years of future into 10 minutes is going to be a challenge. So, just bear with me. We'll see how we go. All right, Crystal Global's headquarters are in Yanbu in Saudi Arabia, and the sales compartments in Jeddah. In the early 1990s, Crystal was formed, and subsequent to that, 2007, they acquired the Millennium assets, which took them to be a multinational with, I guess, the second highest amount of titanium pigment production in the world as a result thereof. Obviously, economies of scale start becoming quite relevant. Where's BMAX? Well, we're all over Australia at this stage. There's a development guy over in Brisbane. There's a rehabilitation site in Newcastle. The Murray Basin itself has got 60 guys at the MSP here in Broken Hill. We have 15 or 14 guys down in Mildura, Thurla, who do our exploration. There's 128 guys dredging at the moment in just outside Pooncarie on our Snapper and Ginkgo mine sites. We've got about 50 guys over at Gwindanup down in Bunbury, where we have also a mineral separation plant separating out the non-magnetic concentrates producing zircon, rutile and leucoxene, and the head office is in Perth. How do we do it? Well, Ginkgo Snapper, we produce a heavy mineral concentrate. It gets magnetically separated into non-magnetic and Mag2 concentrates, which get trucked to Broken Hill. Here in Broken Hill, we do a bit of a wash and a separation process. It gets railed down to Adelaide. From Adelaide, the dry mag products get shipped out. The non-magnetic product goes around to Perth and Bunbury, or at least to Bunbury, and from there it gets shipped around the world. And there's quite a few slides, otherwise I'd be using the laser replacement device quite extensively. So, you've all seen mineral sands wherever you go. That's essentially what we're after, and that just puts a modern perspective onto the ancient dunes that we're exploiting at the moment. Ginkgo pit, 2005, that's what it looked like. Pretty small pit. It gave us all sorts of issues when we were constructing. We were all over each other. Cranes were trying to jiggle for room, so we learnt a couple of lessons out of that. But that was sort of around about March 2005. That's where we are today, probably a little bit further down. In the foreground, if I may quickly add, that's our non-mag separation plant. We do some preliminary separations there. There's our overburden removal. There's the actual dredge that's in the dune. There's a concentration plant, tailings deposited behind it sequentially, and then rehabilitation takes place behind us there. The life of mine plan, start up around about November 2005. Mid-2009, we were in the centre. The turnaround was scheduled for mid-2011. We're actually doing that at the moment, right on, bang on target. We'll go down the return path and complete mining after we've taken out some of these nice high-grade pods that exist in the southernmost component of the reserve. I'll show you how that fits in at a later stage. That's the Ginkgo dredge and concentrator. It's a underwater bucket wheel hydraulically driven unit with a 2,500 to 3,000 tonne capacity, pumping across pontoons into a surge tank and a couple of spirals. The heavy mineral obviously centrifugally separates into the concentrate. The tailings goes on the tails component of your spiral, and we pump that back behind us. That gives you a bit of a perspective of what the pond looks like, what the face looks like, what the dune looks like, and what the bucket wheel looks like. You can see that in rotating. It's hydraulically driven at about a depth of probably 20 metres below us, and that's what we're targeting, are those nice bands of mineral. And there's a little bit of dilution there for those perfectionists here. That's dilution, shouldn't be there, but we have learned how to remove overburden as we've progressed. Dilution's no good, it reduces, obviously, it increases our cost. There's some environmental considerations we need to take into consideration. Obviously, once we've completed the process of mining out, we place topsoil onto the area. We then rip that and we seed it. We do some planting. And the last 2 years, for those of you who've been in the area, has been excellent in terms of rehabilitation. There's been so much rain that it's really been fantastic, and it's starting to look quite good. Whoops, I'll go back so you can have a look at that last one. That was last year in September. Since then, we've had 1 in 200-year rain events. It's just gone absolutely crazy. It's fantastic. So that gives us good kudos with the regulatory bodies. Why Snapper? Snapper was next. It was a fantastic deposit. We could really do some work around that. They are in the same area. There's only a 10-kilometre distance between Snapper and Ginkgo. We could capitalise on all the infrastructure that we installed for Ginkgo, such as roads, power lines, camp and facilities. And to that end, it made sense for us to go into Snapper next, which we did. And we learnt a lot out of Ginkgo. We, I suppose, put Ginkgo together on the smell of an oily rag, and we were in a slightly better situation for Snapper. So we employed some of those practices which really helped us. We got a slightly larger pit, as you can see, if you can refer yourself back to the Ginkgo pit. And that gave us room. We could really set ourselves up for a good start-up. That's the mine path. We started up mid-2010. We actually had some high-grade pods that we capitalised on and sent that over to Ginkgo, and that was a great move. And we should be complete around about 2025. And I'll show you how that all slots in together at a later stage. This is what our Snapper construction pit looked like at the end of March last year. A couple of months later, it really started taking shape. You can see we had a lot more space to manoeuvre inside this pit. And we could start laying out pontoons, and we could plan a breakout plan for the dredging without being completely constrained within the pond. And eventually, in December, we floated the dredge. You can see it's a slightly smaller dredge than the one over at Ginkgo. Snapper has higher grade, and as a result of that, we don't need such a big dredge, smaller bucket wheel, but at a reduced feed rate, we get the same amount of HMC coming out, which is good, HMC being heavy mineral concentrate. That's a picture of last year when we started commissioning. Good times. That's just a picture of the high-grade pit to give it in some perspective. Quite impressive, but what I wanted to drive home here, you can see the big band between high-grade ore, and all of this is overburden. And overburden comes at a cost. And when you combine cost and distance together, we spend a lot of money carting things around, removing overburden to get to the good stuff, which obviously means we need to be quite efficient. There's some bands of our good stuff there that we're after. There's Broken Hill, our mineral separation plant here, does all the treatment of the products before sending off. So where are we going in the future? I'm not going to go into this slide in too much detail. I could probably spend an hour and a half to 2 hours on that slide. But on the left, we've got prospective resources. On the right, slightly less. And out of that, we had to make a choice, what's coming next after Snapper and Ginkgo. And after putting it through the grinder, we came up with Campaspe. And that slide I could also talk through. It takes us to the end of 2031, and it utilises our existing capital, such as the dredges, dry mining units, in the most efficient manner, such that we can sequentially activate and target the various resources around the place without bringing everything to a halt. And this fits into that integrated model of Crystal, whereby they own the mine that produces the concentrate that feeds their factory, and it works out quite well. So they keep their rutile going over time, and we have an operation. we're pretty advanced with Atlas and Campaspe. That's the next one, scheduled to be commissioned around about 2012 or so, 2013. And in the process of doing this, there's obviously a lot of work we need to do. The timeline's tight, but we should make it. We understand the challenges going forward. We can control some of them. We can't control the others, such as the resource base and efficiency and cost control. Those we can't control, well, we'll have to do something about it. And Ginkgo and Snapper, plus our future projects, gives us long-term profitable operations. That's what we're here for. That's what we intend doing. And, yep, we are well on our way down that road. Thank you very much.
Thank you very much, Gavin. Our final speaker this afternoon is a keynote address from Professor Richard Hillis. Now, Richard is the Chief Executive Officer of the Deep Exploration Technologies Cooperative Research Centre. Richard.
Thanks very much, Lindsay. As many people have remarked at this conference, it's fantastic to be here in sort of iconic centre of the Australian mining industry. But I think there is a dark cloud hanging over the industry, and it's not one that's been touched on much before. It's not one about tax. It's not one about training. It's not one about infrastructure. It's one about our discovery success. And it's one about the discovery success we need for the long-term sustainability of the Australian mining industry. This slide here from Richard Shoddy shows the discovery of Tier 1 and Tier 2 deposits in Australia over the last 35 or so years. The Tier 1 deposits are in the bluey colour, the Tier 2 deposits are in the greenish colour. And in case you're not familiar with the terminology, the Tier 1 deposits are the major low-cost producers, the 20% of deposits that produce 80% of production. And if you look at that graph, you can see that over, say, the last 15 years, we've discovered one Tier 1 deposit. Over the 15 years prior to that, 7 Tier 1 deposits. And in fact, 80% of Australia's mineral production comes from mines discovered more than 30 years ago. We are not replacing the resource that is being so voraciously drawn down by China, India, and others. And the bottom table just shows discoveries per decade, so number of Tier 1 and Tier 2 discoveries. In the 80s was 15, in the 90s 14, and in the noughties 7. And the bottom right shows the cost of those discoveries going from sort of $500 million to $1.2 billion. So there is a discovery issue in terms of major new discoveries. And that's the rationale for the Deep Exploration Technologies CRC. But before I launch into the DET CRC and what it is, I just want to give some broader reflections on research and innovation. This is a broader, if you call discovery productivity, there's a broader malaise in productivity in Australia. And multi-factor productivity, if you're not familiar with it, is not just labour productivity, it's labour productivity plus other inputs like energy and infrastructure. It's meant to be a more reliable representation of productivity. And there are 4 comparator countries there, and there are 4 bars that show the growth in productivity, 85 to 90, 90 to 95, and so on and so forth. And you can see that Australia's growth in multi-factor productivity has dropped off significantly and is not comparing well with those comparator countries. I'm going to draw a line and suggest this is because research and innovation in Australia is not well linked with industry. I'm going to try and make that argument over the next few slides. This is a busy slide, but I'll pick some of it out for you. It essentially shows the distribution of researchers in various countries and whether they're public or private sector. Essentially, the light blue shows private sector researchers, and the dark blues and the greens shows public sector researchers. And if you take the example of Finland, which you probably can't see, but it's about 3/4 of the way to the right, in Finland, 60% of the researchers are in the private sector and 40% are in the public sector. If you look at Australia, 30% of the researchers are in the private sector, and 70% of researchers are in the public sector. I think the problem gets more profound when you look about the link between research and innovation and industry when you look at this. Let's look at the firms collaborating on innovation. Firms collaborating on innovation. On the left-hand side, government research institutes, and Australia is well and truly at the bottom of a long list of companies. So not only do we have lots of scientists in the public sector and governments and research institutions, but companies don't collaborate with them. It's a pretty profound couple of slides, really, and the higher education sector is just kind of off rock bottom. Australian firms do collaborate on innovation, and these numbers don't add up to 100% because companies might have said they collaborated with a sector and a competitor and all the other places. But in terms of clients and customers and suppliers and consultants, even competitors, 30 to 40% of companies collaborate with them. In terms of this, I hesitate to say, army of researchers in the private sector, again, in the public sector, beg your pardon, little evidence of industry collaboration with public sector research. So, does innovation really matter? Can you draw the link between innovation and productivity? Well, I've got an anecdote and a quote. The anecdote relates to the picture on the left. Australia, of all places, should be able to draw the link between research and innovation and productivity, because Australia is the world's only science spin-off nation. Cook's endeavour voyage in 1768 was to look at the transit of Venus between the Sun and the Earth. The scientists in the ship were off to Tahiti. Even in those days, researchers liked nice destinations. They were off to Tahiti to look at the transit of the Sun and work out the distance to the Sun and work out the size of the solar system. And along the way, and as a spin-off, Cook proclaimed Australia, landed in Botany Bay and proclaimed Australia for Mad King George. So in some ways, Australia is the world's only science spin-off nation, so we should certainly recognise the value of it. Perhaps more prosaically, a quote from Alan Greenspan. Alan Greenspan says that 70% of the increase in US per capita GDP from 1950 to 2000 was through the exploitation of new technology. 70% of the increase of US GDP over the last half of the last century is due to the exploitation of new technology. And we clearly have some sort of gap. Are Australian researchers no good? Aren't they worth working with? I don't think that's probably likely. To give you another statistic, for about 2% of the research funding, Australian geoscientists produce 5% of the international publications on geoscience. So they're good at what they do, they just aren't particularly strongly linked to or driven by industry issues. So jumping the innovation gap, I think, is critical, and I don't think people would really disagree with the summary points in these slides. MINEX needs innovation. The mining industry has a problem with new discoveries. It's clear from that slide. We have world-class researchers, but there's a lack of collaboration. And I'm sort of passionate enough about this innovation gap that I moved from my very comfortable professorial chair at the university to head up this CRC, which is really at the crux of trying to have industry problems drive the researcher agenda. So that was a bit of general background before going into the Deep Exploration Technologies CRC. You may not have heard of cooperative research centres. You probably haven't. There are about 40 in Australia, and they cover a whole variety of topics. They cover hearing, they cover wheat, they cover sheep, they cover Aboriginal health, and this one covers mineral exploration. They are all public-private partnerships. So the Deep Exploration Technologies CRC has $28 million from the Commonwealth Government and $21 million from its industry partners and another $60 million of staff time from its researchers to address the kind of industry-driven problems that I think we've been poor at addressing in Australia. Our industry partners are there: Barrick, BHP, Boart, Goldfields, Newcrest, Valley. The South Australian Government are important participants, so we're headquartered in Adelaide. And the research providers are important participants. And the principal research providers are CSIRO, Curtin University, Adelaide University, Geoscience Australia, and the University of Western Australia. But we can work with anyone. We are also funding SMEs to do very applied, specific pieces of research of the kind we need. A little bit more about the setting and the need for the CRC before we go into the specifics of projects. And again, it relates to this discovery issue. Here's a pretty stunning graph of world copper production from 1900 projected through to 2030. And the statistic, I've seen a version of this already at the conference, the statistic on this one that astonishes me is that from 1981 to 2005, which is the green bit in the middle, over those 25 years, the world used as much copper as it had ever used before in history. Well, that's sort of quite amazing. But the more amazing thing is that from 2005 to 2030 in yellow, on projections that we are following, even allowing for the GFC, we will again use all the copper that we've used in history, including that previous 25 years. So there is a voracious demand, which I think everyone in this room is familiar with. And we are drawing down the reserve. We need these new discoveries. These are real Tinto figures, and I'll just stick on copper to stick with one commodity. Global copper reserves expressed as years of production, 45 years in 1996, 25 years in 2008. And not only is the reserve going down, but the grade is going down. We need new Tier 1 deposits. Copper exploration, it's getting tougher to find. This graph, the sort of bluey color bars are major copper discoveries as defined on the header. And the greenish, the light greenish background is the exploration spend. And more or less, you know, as you see a peak from 60 to 80, you get more discoveries, and a drop-off, another peak, and more discoveries, more or less, except that last big 2005 to 2010 peak. It's pretty noticeable the exploration spend has not translated into discoveries so well there, although, you know, things may still be being proven up. But there's part of the challenge. That which we are discovering is getting deeper. This plot shows time. It's, I think, 1850 through to 2010 through to the present day. And on the y-axis, it shows depth of discovery, the size of the circles, the sort of size of the deposit. So right through to 1970, pretty much everything's at the surface. And then we start to discover things like Olympic Dam at depth. And we're going deeper and deeper, so that resolution, which is now a much bigger circle than that, a big copper discovery in the US, is under about 1 kilometre of cover. So we're not finding as many deposits, and the deposits that we are finding are deeper and under cover. It's pretty clear that we need smarter, cheaper technologies for exploration under cover. And that was the rationale for the government and for industry forming the public-private partnership on exploration technologies. In the Australian context, we need to open up the search space. The mines are all, as you can see from that slide, in areas where the shallow basement outcrops or where it's relatively not deeply, shallowly covered. I'm not sure shallowly is a word. It's relatively shallow to prospective basement. We have to open up the other more than 50% of the continent where the mineralized basement is deeper. And we're not very good at exploring undercover. I haven't got the slide today. I often show a slide of Kennecott Mine or Bingham Canyon Mine since 1906, biggest hole in the ground in the world, and only recently announced a moly discovery at the bottom of the mine. If after 100 years of mining we're making discoveries at the bottom of Bingham Canyon, we're not really all that good at exploring undercover. And depth isn't a killer of value. These are just internal rate of return, or NPV, for ore bodies at different depths. So we can make money out of deposits at depth. It's our ability to find them is a lot poorer than our ability to mine them. And finally, on the cover challenge, there's a big brownfields challenge. That picture of Olympic Dam being drilled out might make one of my sponsors happy. It might make Bort happy. There's about 10 rigs drilling away simultaneously on a 100-metre grid, proving up that deposit. Here's a Tanzanian gold mine with an awful lot of parallel holes to prove up that deposit. Well, when we prove up resolution, are we going to drill straight parallel holes from the surface to 1,200 metres? Or are we going to do something that is surely more economic and more effective and drill a single mother bore to close to the top of the mineralized zone and then drill what I would call multilaterals off that and vastly reduce the exploration spend? So there's a brownfields challenge or a drilling out challenge to cover as well. So that's all the context at the macro scale and the meso scale. What's the CRC? Well, the CRC is a company, public-private partnership, but it's a company. We have an independent board and a representative steering committee. So those that sponsor us sit in the science steering committee and decide what projects we're doing and how funds are allocated to those projects. We have about 50 million in cash and about 60 million in-kind to develop new mineral exploration technologies. We're not really about the science of exploration. We're not about the geoscience of ore deposits. We are about the workflow. We're about better ways of drilling, better ways of logging, as I'll talk about shortly. And although I am currently based at Adelaide University, as soon as Bort Longyear finish building their new facility at Adelaide Airport, our headquarters will be embedded there, and you'll understand from my first set of slides why I'm keen that that's the case. For your interest, the participants pay just under $500,000 a year to be involved. We also have a scheme for affiliates, for smaller companies, to pay a much smaller subscription and be able to monitor and collectively as a group influence what we're doing. There's some of the affiliates. It's not quite up to date. We've a couple more recently, but those are the affiliates. Grouped in either juniors on the left, service companies in the middle, and surveys on the right. And collectively, those, what we call colleges, have the right of one of the, broadly the rights of one of the fully funding participants. This is an animation, so let me try now move into the technology that the CRC aims to develop. And this is an animation that was put together by Barrick, by their exploration manager, to persuade their, or explain to their board what the CRC was about. So are you able from the back to click that animation? I don't think I can start it from here. And what it's doing is comparing present exploration methods with a possible future model. So it's Barrick, so there's a giant gold mine, giant gold nugget under the hill, and it's saying that current processes are where you have to clear a drilling pad or establish a drilling pad at great expense. We helicopter in lots of heavy equipment, which is manually handled. We drill lots and lots of more or less straight parallel holes to prove up a deposit. In the process of doing that, we kill lots of drilling pads and have a big environmental impact. Is there a different way? This might not be the way, but it's a vision. That's a coiled tubing rig. You don't even screw pieces of pipe together, no manual handling. Can you drill a horizontal well with a coiled tubing unit? A mother bore in yellow. The dashed line is meant to represent logging information coming straight out of the hole. Are we always going to cut a core and send it for assay and mobilize and remobilize when we get something interesting? Those waves are meant to represent out of the wellbore exploration and the discovery of brownfields extension, with a lot of that information being sent back to headquarters in a way perhaps not unlike our first speaker this afternoon. A lot of my, a lot of people in this room, I better keep up with the video, I better not digress. Here's the same idea in perhaps an Australian environment, a city or under a salt lake. Again, there's the real-time information coming from the holes. There's the multilaterals off a mother bore. There's the information being sent back to headquarters, just in the way that Woodside drill their wells offshore Mauritania from Perth. There's the near wellbore exploration for the, if you like, the brownfields exploration for the brownfields extension. So the CRC, and that vision is a pretty good one for the CRC. It is probably primarily concerned with real-time data. Are we always going to cut a core and send it to an assay lab? We're always going to do that. Or could we, like the petroleum industry, make our primary point of data logs that are run in the hole? And of course, in the petroleum industry, they're run while drilling now, in what's known by measurement while drilling. Don't worry, I'm not going to keep you away from dinner so long as to go through all of these projects, but I will just mention a couple. Well, I'll start by mentioning there's three broad areas: targeting, logging and sensing, and drilling. This hypogene alteration project, that's very involved with the portable XRFs that have become so popular in exploration. And that's a sort of lab-on-the-rig type model. Can we work with Boart Longyear to put analytical equipment that we can get a lot of the information we need off chips ahead of assaying? This project here is the next step: sensors for rapid downhole down rock characterization. That's developing the probes, and what we believe we need, and tell me otherwise later if we're wrong, we think we need geochemistry, we think we need mineralogy, and we think we need an image. If we can get geochemistry, mineralogy, and an image from the hole, we might get to a point where we don't need core, or if you just can't imagine a JORC reserve without core, well, we certainly cut a lot less core that is calibrated to wireline measurements. And another of the projects, the sort of fundamental next generation drilling technologies, well, that's the one about mother bores and multilaterals. Thanks. So let's take that Project 1.1, we call it. The Project 1.1 is the Next Generation Drilling Technologies project. And we've just had a workshop to decide exactly where we want to focus that project. And we have decided we want to focus it on either coiled tubing or flexible hose drilling. Now, it might seem strange to you if you hadn't heard of coiled tubing, but the steel pipe sits on a drum, it's unrolled off the drum via an injector, and it's put down the hole. There is no manual handling. I'm not going to go through all these stats. It's very quick setup, but they are drilling in Alberta two $1,000 meter holes per day, routinely with a coiled tubing rig. Two 1,000 meter holes per day. Now, admittedly, that's in sedimentary strata, relatively predictable soft rocks, but it's a pretty stunning vision to have. Our not only improved cost, improved hole stability, because you're not screwing, not making connections, you're not turning air on and off. Obviously improved safety, you've got rid of the 50% of exploration injuries that are manual handling, and obviously reduced environmental impact, because you're essentially driving this up rather than clearing a pad. There are key challenges. The coil is not all that durable, so you might only get 12 or so winds and unwinds. It's probably not going to be cost-effective in Minex, so can we use different materials? And we need a downhole impact tool, so how do we get power down the hole? How do we have a downhole impact tool as opposed to the kind of rotary tools? But that's the kind of rubber on the rig. We've sat with drillers, nobody said this is impossible, and there's a very specific industry-driven agenda to look at the aspects of delivering a coiled tubing type system or a flexible hose type system to Minex, is our Project 1.1. I'll spin through these. Our Project 1.2, that's about bit rock interaction. So there's a whole series of test rigs in a lab in Perth, and they're testing composite diamond setup. But more particularly, this project is about defining the drilling sweet spot. So instead of the drilling sweet spot being driller's experience, just purely driller's experience, can we have a set of parameters that we can use to optimize drilling more routinely? Sensors, we've got a rig that I'm going to tell you more about in a second, but we're about to start drilling with one of only 2 drills in the world that Boart Longyear have, their newest rig. And that we're putting extra sensors in that to measure everything: axial vibration, turbidity, everything you can think of in an attempt to sort of systematize driller's experience of the driller's sweet spot. I'll come to the drilling test facility in a second. I'll just mention one more of these here. We have a project where we are building carbon fiber drilling rods. 2, maybe 3 drivers for carbon fiber drilling rods. One, you can embed sensors in carbon fibre drilling rods that you can't embed in steel. If you want to look at conductivity or inductance, that's too perturbed by the steel of the casing, but you can put such sensors in carbon fibre. Two, it's about a third the weight of steel with many of the equivalent properties. So as a longer-term dream, could we completely replace steel pipe with carbon fibre pipe, and existing rigs could drill to 3 times the depth because of the hoisting capacities. So that's a real long-time driver for composite fibre rods. Another attraction of composite fibre rods, and you might be able to see copper wire and that fibre rod in the bottom right, is that we can embed uphole communications in the carbon fibre rod. It might surprise you that for all the technology in petroleum and measurement while drilling, which you've probably heard of, the data from the drill bit, or the sensors behind the drill bit in petroleum, are generally transmitted to the surface by mud pulse telemetry, pluses and minuses in the mud. That is, to say that's limited bandwidth is very limited, and much of the data actually comes from hard memory cards that are recovered. There is such a thing as IntelliPipe, but it's expensive and not routinely used in measurement while drilling. So another problem that has to be looked at is the uphole comms issue. Again, another of our projects that our researchers are working on. The drilling research and training facilities is a brilliant idea that I inherited. It's a mine called Bracunga in the Adelaide Hills. Hasn't been used for about 40 years. Boart Longyear were always going to put a drilling rig in here, but have become so enthusiastic for us to use. But they've become so enthusiastic about the whole venture that they're putting their newest drill rig in, the 4200 or SC9. There's only 2 of them, one at Bracunga, one at the bottom of Bingham Canyon. And the driver for this was, if we're developing new drilling technologies, if we're developing new sensors, we need to have somewhere to test them. It's not practical, safe, or economic to test them in an operating mine. So we're going to drill a hole at Bracunga. There's all sorts of mineralization at Bracunga, so we will not only be testing the drilling performance, but we will also be testing the performance of all the sensors against core that we've assayed and generally analyzed as a reference. The other very neat thing about this facility is that it is adjacent to the Country Fire Service Training Centre. That might not excite you terribly, but what that means is there's 100 beds, there's classrooms. They're only used on the weekend by the volunteer Country Fire Service folks. So during the week, we've got accommodation, we've got catering, we've got a drill rig. There's a skills shortage. It didn't take Einstein to work out that we should, when we're not using the rig for technology testing, we've got a great opportunity for driller training. And we've already run 3 driller training programs at Bracunga, taking the driller's assistance training off the mine, putting it into a safer environment while people were still green hats. So it's both a technology testing and a training facility. And we don't intend to keep that. Obviously, the there's just to remind me to mention that it's about 45 minutes drive from metropolitan Adelaide, so it's easily accessed, and it's in a very pleasant area. We're not going to keep that facility exclusively for the CRC. CRC technologies will get priority, but we're not going to keep it exclusively for the CRC in any way. The CRC has a pretty novel and important IP model, and it's an interesting one. Although the mining companies are sponsoring us, at the top of the triangle, the mining companies, BHP, Vale, Newcrest, are giving us the money. They don't want to hold the resultant IP. Nor, it has to be said, that they want CSIRO and the universities holding the resultant IP. The reason for the mining companies sponsoring the CRC is they wish the IP to be licensed to the service sector. And that's the way they're used to dealing with things, so they would like the new drills, the new drill bits, coiled tubing licensed to Boart Longyear, whoever might license it, and then it's accessible to them as a service. Now, they might get some sort of preferential rights that will be negotiated case by case for the pieces of technology, but it is an unusual IP model. And, for example, when the government visit us, they're very much, are you going to sustain yourselves in the long term by royalty from IP? That's not the way the CRC intends to operate. It tends to license the IP to the service companies because what our sponsors or our shareholders or our members have said to us is they want the services out there and available to them, and the people who are used to delivering products are the service sector. It's a pretty bold venture. There's no doubt it's a bold venture, and $100 million or $110 million isn't probably enough to do it all. We hope to draw in further in-kind support, but is there any evidence of sort of industry meeting this kind of technology challenge? I think there very much is. And I think there is a fabulous example in the petroleum industry. And these are a couple of slides from a National Geographic article about the future of the oil industry. And the date of these slides, this slide is 1961. The darkish reddish blocks are acreage in the Gulf of Mexico. The brighter red bars are reserves at that time. And in 1961, there were 80 million barrels of reserves in the Gulf of Mexico. I don't know if you know what the current daily oil use in the world is, but it's 90 million barrels. It's pretty amazing actually, we use 90 million barrels of oil per day in the world at the minute. In the 1961 Gulf of Mexico, there wasn't 1 day's oil reserves at current usage. Now, obviously, that's not what the usage was in 1961, but at current usage, there was less than 1 day's oil reserves in the Gulf of Mexico. It was history. There was no, they had gone as far into the deep water as they could. The salt was an impenetrable barrier to the geophysics. The water was too deep. Forget it. If you want new oil reserves, you have to go to Saudi Arabia. You have to take sovereign risk. I guess what Ian Willis would call the glass half empty view of the Australian exploration context at the minute. Well, let's fast forward 40 years to 2001. There's all those little deep water ones have come in. The reserves are up to 1.5 billion barrels, and there's a whole load of new licenses that you might not be able to see out into deeper water. What challenges were solved? Well, the geophysics allowed them to image the strata beneath the salt. That was critical. Deep water drilling allowed them to put their drill rigs in deeper water. Measurement while drilling was absolutely key to it. There was real-time data coming from the bit coming from the bit to the surface to keep the bit in the reservoirs. That story doesn't end there by any manner of means. That article ended at 2001, but the real big discoveries, and this is now the whole 2001, the whole thing is 1.5 billion barrels. We've gone from 80 to 1.5 billion. I haven't got a similar compilation, but if you look at Chevron alone between 2002 and 2008 added 8 billion barrels beyond the 1.5 that was collectively in the deep water, with a 45% success rate. The traditional wildcat success in petroleum is 1 in 10. All driven by better targeting, better drilling, and better logging, which is exactly why our programs are targeting, drilling, and logging. That's covered there. There's another important part that has been a bit of a, if you like, a guiding philosophy for the CRC is this happened at the time that the oil companies, in many cases, were either closing or downsizing their research labs. And the research was actually driven by the service sector. It was the Schlumbergers, the CGGs, that developed the new seismic migration algorithms. It was the Halliburtons that developed the new drilling techniques. And it is fascinating to compare the oil field services sector with the mineral services sector. I don't know if Boart Longyear are the biggest mining services company. I suspect they are. Boart Longyear's market cap is about $2 billion. Compare that with the petroleum industry. The service sector is bigger in the petroleum industry than many of the oil companies. Baker Hughes, a 20 billion company. Halliburton, a 33 billion company. Schlumberger, a 74 billion company. Because they went much further, they delivered the full service. They took on board, if you like, the logging, the analysis, the model building, in a way that hasn't happened in the mining sector. I think I've got plenty of time, and this is my, yes, I get a nod there, so that's good. And this is my second last slide. So hopefully I've given you a bit of an overview of the CRC, but I want to go back on the second last slide and just give some broader perspectives on research and innovation, and those, what I think, really important half dozen slides I showed at the beginning. And, You can perhaps tell that I'm an immigrant to Australia, if you can detect any Scottish dulcet tones. But sometimes as an immigrant, you have a different perspective. And I'm always amused by the Australian perspective of the lucky country. Australians sort of seem to love to think that it's just a lucky country and you sort of lie on the beach and drink wine or beer and great wealth has come. I think that's a terrible myth, and I think it's a destructive myth for Australia. From 1790 to 1890, Australia went from one of the world's poorest to one of its richest nations. And you won't be surprised that the thesis I'm going to develop here is through research and innovation. But I'm just going to read a quote from a book, if I may, first. It's called The Australian Miracle. And I didn't think there could be a page-turner about Australian science policy, but this is as close to a page-turner about Australian science policy as you can imagine. But it starts off by quoting the naval officers, one English officer who described this situation in 1790, which you might consider in the context of the lucky country. The dread of perishing by famine stares us in the face. Our soldiers have not a shoe and mount guard barefoot. The country, my lord, is past all dispute a wretched one, a very wretched and totally incapable of yielding to Great Britain a return for colonizing it. Amidst its native productions, I cannot number one which is valuable as an article of commerce. There is no wood fit for naval purposes, no fibrous glass or plant from which cordage can be made, no substance can aid or improve the labours of the manufacturer, no mineral productions, no esculent vegetables, worth the care of collecting and transporting to other climes, and lastly, which is the most serious consideration, no likelihood that the colony will be able to support itself in grain or animal food for many years to come, so that a regular annual expense is entailed for the mother country as long as it shall be kept. Well, that's what they thought when they arrived in the lucky country. And Australia was one of the poorest countries. Well, the Australian miracle is that by really from 1890 to 1870 to World War I, it had the highest GDP in the world. It was 1870 to World War I, world's highest per capita GDP. Just 100 years later, had the world's highest per capita GDP, and there's some numbers there. And even on broader measures of wealth, it fared well, illiteracy and health measures. Well, Australia had a phenomenal uptake of new technology. This book's full of it. I could talk about how technology was adapted for sheep farming, for all aspects of agriculture. And that's what drove an incredible transformation. Not, I don't think, the lucky country, an incredible willingness to adapt technology in a way that we've perhaps become not so good at. Again, one quote, one set of stats, one anecdote. By the end of the 19th century, relative patenting activity was higher than the three big world powers at the time, Britain, US, and Germany. So it had been settled 100 years ago, and 100 years later, its patenting activity was greater than the three great world powers. And an anecdote, in 1895, Röntgen discovered the X-ray. Well, in 1896, William Bragg used X-rays to X-ray his son's elbow. And I like that story for a couple of reasons, because Lawrence was his son. William Bragg was a professor where I was a professor at Adelaide University, and his son was at the school where my kids go to school, so I feel some affinity for that story. And a year after X-rays were invented, Lawrence Bragg fell off his bicycle, and William used them to look at and investigate the break. And of course went on and won the Nobel Prize for it. Australia has a phenomenal history of technological adaptation. And I put this in about the parable of the two frogs because I thought everyone knew the parable of the two frogs, but I was driving up with two colleagues, and neither of my colleagues knew the parable of the two frogs. So I just tell you it. The parable of the two frogs is that two frogs are happily traveling along, and they jump into a vat of cream that is so deep and so high-sided there is no chance of them escaping from this vat of cream. And the realist frog assesses the situation after kicking pretty hard for a while and promptly gives up and dies. The outrageously optimistic frog keeps on kicking and keeps on kicking, and eventually the cream turns to butter, and the optimistic frog is able to jump out the vat and save itself. Well, I think that's a better analogy for Australia than the lucky country, and certainly explorers need to be the optimistic frog, but I think in terms of technology innovation, we can look back in the history for some parallels to use. So just to conclude, I hope I've given you a wider context of the need for innovation and industry-driven research. I think it's a really important issue in Australia, and DET-CRC is only a smaller part of that much bigger and much more important issue. I hope I've told you about the CRC and how we are about changing the technology of mineral exploration, different ways of drilling, different ways of sensing, and certainly invite you to be involved as an affiliate or a participant if you would like to be. Thanks very much, Lindsay.
Thank you, Richard. Richard, we've got a couple of minutes. Would you take any questions?
I'm happy to take a question if there is one.
Are there any questions of Richard?
Or anyone else?
Hello, my name's Alison Coots. I was interested in the model of commercialisation for CRC, and I noticed that there is a royalty for participants. Can you give me an idea of how that royalty is charged, what sort of percent and on what basis?
Yeah, there isn't a royalty for, so participants pay to be involved, and all we have said is with IP, the job of the CRC is to license that IP to the service sector. Now, we haven't specified the terms of that licensing yet, because until we know whether it's a carbon fibre rod or a coiled tubing rig, we can't specify it. But the philosophy is that we will get it out there, and there will be some advantage to the original sponsors. So if it was a new drilling technology, if the original sponsor said, right, well, we'll give you 10,000 metres of drilling in the first 6 months or whatever it is, then we'll have it exclusively. So, and in terms of a royalty, the royalty flow would be back to the CRC, but the royalty flow isn't the key driver. The key driver that our shareholders and members want is to get the commercialisation out in the service sector, and then we sort of negotiate on behalf of the participants to try and ensure they get some sort of preferential deal in the initial deployment of that technology. Does that explain it?